All right, so I don't know if I'm gonna post this to Rumble or not later. Actually, we'll see. We'll see. Decide I'm going to turn on the camera and maybe do a little bit of narration as I trade. Just kind of speak through, and maybe this will be an exclusive for Rumble, but we'll see. So for right now, what we're looking at, kind of short. I'm kind of running a little bit behind on my checklist because I was doing a little bit too much this morning. So I make sure I go through all of my stuff on my checklist. We just seen we're at a supply point right now to where I actually did get a trigger. So I guess I missed that one. I don't want to be like just coming in at the last minute, not really focused like I should be and trying to place a trade. Make sure I got everything on my checklist checked off, and then I'm really fully and truly ready to go. All right. So that was playable, the trigger that I got. And I could have taken a little bit of a profit there. But we're still climbing. Actually, we had this momentum around 8:30. And that I think there was something on the schedule like initial jobless claims or something like that. So we did have some buy strength off of that. And at first 3 minutes of the open continued that buy strength. Now my trade bias is still short, so let's see what we get. I'm looking for my next signal and make sure everything else is ready to go. And like Dr. Lee said on Drumline, let's get crunk. Seeing a quick supply response right there. Well, we had a historical push of energy. So we see volume there where we just pushed through and we had our supply response. Another thing that'll be exclusive about this if I put this on Rumble, is this is a perspective that I don't share on the regular YouTube stream. And we'll see, maybe I make this a regular thing, just an exclusive almost trade along for the Rumble channel. We shall see it, how that work it. So they extended that supply about 5 ticks, maybe even a point. You can look at it kind of that, or 10 points. I meant 5 points the first time. Current supply areas off the PR high.
Order submitted. Order filled.
Let's see what we get. I wouldn't be surprised if I get caught in a rotation.
Order filled.
All right, there we go. First play. That's how I like my first plays to go. I like doing the workout right away. It's, just being honest with myself. Starting out in the red is like difficult. It's challenging for me, but as long as I stay locked in and focused on what I'm supposed to be doing, I'm usually okay, even if I start in the red. So right now we've kind of set up shop right here with an inventory response.
Order submit. Order filled.
This is a small shop. Normally we don't hold these kind of shops for that long.
Order filled.
Now I got caught some slippage there. And so what I've been working on lately is not executing, but reacting when I get the trigger that I'm supposed to react to. Because what'll happen is I'll get the trigger that I'm supposed to react to, but it'll be real quick. I don't have the speed that our wholesaler has, right? So I'll get my trigger real quick and then price a move in a way that I don't, in a direction that I don't want it to move, right? And then I still, even though I got that trigger and it moved like how I didn't want it to move, I still need to react. And the idea behind that is it's better to take a small loss executing where you're supposed to due to slippage than to take a bigger loss or to get caught on the wrong side of that, by the way my strategy works. Because of hopeful trading, right? Hopeful trading that's not where it's at. You want to stay, here we go. See, I made the video about you and I, or I talked about you and I I talked about the U word on the last YouTube stream, and here I go using it already. So I told you I'm not immune to it, but yeah. I forgot what I was going to say with that because I got stuck on the U thing. So, I mean, we held that supply point. And now we're starting to push or dip deeper. Actually, we're starting to revisit a previous inventory point. We were marking up inventory, but now we're going back to our primary inventory point, which increases the possibility or the probability that we're going to start traveling with this price and we're going to leave the shop at least temporarily. That should start the engines to leave our shop area that we set up here in the last few minutes. This is interesting. So I have a trigger coming up. I'm being front ran on my trigger, which makes it less desirable, to be honest with you. So I'm gonna pass on that one. Now I could be wrong. So what they could do, they could be extending supply. Getting paid off of higher prices, right? At a higher value, but they're not. So we're actually taking an elevator on this one. And I'm going to make another video where I'm going to explain all these terms. These terms have shifted. I want to make sure I solidify the terms that I'm using because I kind of use certain terms that I was using in the beginning to explain the way that I view this side of the market. I wasn't really digging those terms like 100%. So, things evolve as we go along. So point is, I'm going to make a video going in on these terms that I'm using. All right, so that took us above. So we're at the point now where I would be looking to adjust my trade bias. And we had a very interesting point to where I'm kind of in a standstill and I'm looking to see. I don't have a trigger right now, basically. I'm waiting for a good trigger to come in. Because we were taking an elevator, now we're climbing a ladder. Which is usually an indication for a reversal or a squeeze. 9 times out of 10, well, not 9 times out of 10, that's a natural ratio. I can't use that loosely. But for the most part, taking a ladder is a energy observation that is usually followed by a reversal. I like how I said that right there. I like the way I defined that. So actually so now my bias would have to be, and these are rules that I have set for the way that I trade, or that I have set for my strategy. that are just hard quoted, and I have to. It just makes it more simple for me, so I don't have to overthink this and what I'm doing, right? So my trade bias now will have to be long. I have been my trade bias has been reversed. So now I just, I'm waiting for that trigger. We had a couple points of inventory, one off PR plus one. Another, I would say 685. And now we're playing around a sort of an aggressive inventory zone of 690. Which was just initiated, but in my opinion, it was initiated sort of weekly. That don't even sound right. It was a weak initiation. So I'm just in observation mode right now. I'm in the driver's seat. We do got automation coming up here to meet us, which gave us some lift. Now we're taking the stairs. Stairs might be turned into the elevators as we come into. No, we're still taking the stairs. All right, we're still taking the stairs as we come into our session high. And that was a very mechanical sequence of events right there. As you can see how I got my chart color coded. And, specifically I'm talking about these what is it, these the rectangle tool or whatever it is, this blue, these different blues right here. That was drawn off of overnight structure, and all I'm looking for there when I draw this, when I highlight, these little areas like this before in the pre-market, before the open, all I'm really looking at is significant volume shifts and the high and the low, the session high and the session low. So now we have another aggressive inventory right here at 700, or no, 710. Sorry about that. Another thing that I could actually improve on is when to be aggressive and when not to be aggressive. And just my thesis as of now, but being aggressive is more about risk management and consistency. So really, it's not even about taking the highest probable setup when you're being aggressive. It's really just how did you set up your risk, the risk side of that aggressive technique that you have within your strategy. We're still getting mechanical, structural responses here. As we see, we're getting a inventory response off of that previous breakout. I see that right there could have been an aggressive trigger for me. So the risk side of that would have been the most important thing. And then doing it consistently so that the winners can pay for the losses. All right, back into our volume, our high volume point. And I missed my trigger there because my mouse was on the wrong window. So I should be inside of a trade at this moment. But technology, am I right? Bit of a slow, creepy energy here. Some front run action. This could go either way. So we need consistency
Order filled.
and risk management here. I kind of jumped that a little bit. All right, so that set up a supply response right there where we picked up some brief inventory.
Order filled.
And right now it's time for me to focus. Back to our PR+1 where I was triggered into the next sequence. Let's see, okay. So that target would have been 700. They gave me a creepy target.
Order filled.
All right. Make sure I lock and load, and I gotta refocus. I mean recenter. All right, so now we got what I would call the predatorial, the predator movement, which I'm cool with the predator. Me and the predator, we've come to an agreement. And all I gotta do is hold up my end of the bargain. You know, that didn't, you know, that doesn't mean what it sounds like. Just, I didn't sell my soul to the devil, so to speak. Just that I have come to an understanding with what I've identified as the predator movement. Have a moment, have some clarity on it, and I have evolved my strategy around that understanding. So I just need to stay consistent and focused and execute the way that I'm supposed to in order to get the benefit from that. So we had some decent inventory pick up there around 665. Still holding supply at PR+1. Where we also have automation. And we're starting to push through that automation. So what our predator movement did there was, it was a collection of inventory. I kind of see it as new inventory, as in we sort of emptied our warehouse and then we just went on an inventory run to pick up some new inventory, and we kind of took the stairs to get that inventory. And now we're being aggressive with releasing that supply. but this can be tricky. All I gotta do is stay consistent and be locked in and ready to do what I need to do. Hold up my end of the bargain. That's the only goal for me, is just to be consistent and as flawless as I can be with my strategy. The only goal is to trade the strategy to perfection. Now we get in a inventory automation response.
Order filled.
Honestly, I reacted to the front run. It's cost myself some ticks there, a couple points.
Order filled.
All right. Now to explain that one right there, and I'm really doing this for me more so than the recording, is I had a target where we're at right now, but I took the higher probability profit area, if you so to speak, to where I front ran my own target or profit target, just because the money was there. So I took the money that was on the table, and that was a price action based decision. And that's kind of my way of kind of checking myself on being greedy, because greed is one of those challenges of being successful at this over for as long as you want to be successful at this. And it can be something that's easy to slip into without really understanding or realizing that you've slipped into a greedy way of participating in this environment. So, my response for me to that is I can set my target, but I do not necessarily have to hit my target to take the profit. If the profit, you know what I'm saying, if I'm not just taking little baby scalps.
Order filled.
Now that wasn't one that was kind of aggressive for me, especially the way that printed, which is one thing that I'm working on. I mean, everything is there. It's just that the probability is not as high to where I took the position. But it's not something that I haven't seen work out the way that I would want it to work out. So it makes sense. It's just not one of my
Order filled.
one of the things that I've seen work out the most. From my studies. All right, so that would have put my target up there. And to be honest, that's giving me a target that I'm not too crazy about, but I got to take it.
Order filled.
Right. So my P&L this morning is just back and forth. It's just up and down. All right, what time we need to do a time check? We at 9:57. And let's see if we get that our 10 o'clock participant. With the way this is printing, yeah, I would have taken a lost. I mean, I would have got caught in that rotation regardless of how that. So I think I actually took the best. I would say I took the best initiation in that area, or off that previous movement. Now we're getting a inventory response at 650. So waiting for our 10 o'clock observation point gives me a good air time to take a break. I'm perfectly okay with if I don't get any more good setups for the rest of the day. That is all right with me. Coming back down to MSRP. And at this point, I would say our game maker has showed their hand for this, at least during this time period. I think it is fair to kind of segment the session into different time frames to where the energy is typical to shift. So of course everybody knows the difference between the London session and the those different global session times, right? And how price and how we typically get an energy shift to define it accurately, during those different session transitions. But specifically for the New York Stock Exchange, you have the way from my observation, you have the open till about 10:30. A lot of times you'll see an energy shift around 10:30. And then the next one would be somewhere around lunch or after lunch, meaning 12 noon Eastern time to 1 Eastern time. Somewhere between 12 and 2 actually is where you'll see that energy shift. And then you'll have the close around after 2. The energy shift that takes us to the close. So now we at 10. And we are actually getting that our 10 o'clock participant, but it's being done very sneakily in a sense. It didn't show up as an obvious, volatility spike like we usually see. But looking at the numbers, if I look at my Delta board here, I can see that energy has picked up at 10. So they're here, and they're just, they're just really on a value hunt at lower prices, taking us almost a PR -1. And now I'm once again waiting for a solid trigger. We at a point where I can be looking to flip the bias. which structurally it's not in the ideal location for me. But I mean, the momentum is there. Bias is officially flipped. And we're staying true to what we saw overnight. The structure that was created overnight, to where pretty much everything that happened overnight was squeezed into this 1 hour how do I want to this 1 hour open window. All right, this 1 hour window of the New York Stock Exchange open. All right. So my areas of interest has been put into place. You know, if anybody that's watching this, you could probably, if you've been following for any length of time, if you heard me narrate price action, you could probably have an idea of what my areas of interest are. You know exactly, actually, because I'm pretty clear about it. There's a price action front run. Now this area can be tricky, and it can be a setup. Just that's what it can be. But consistency is key. We got automation right there around 585, which makes this even more interesting. Let's see where they go from here.
Order filled.
Tough.
Order filled.
All right. So I had to take a response there. Yep. So I'll go ahead and I'll break down that last little play right there. So my entry was based off of supply. That was my initiation. It was based off supply since my trade bias is short. I actually was disciplined enough right there, unlike the last trade. No, not like 2 trades back, I think it was, where I actually reacted to the front run. I took a trade where I responded to the front run. There I stayed patient. I actually waited for the proper entry location. I took the initiation, and that actually put us inside of automation. I got the response that I wanted. They lifted supply a little bit, which is cool because I actually got some positive slippage, which is rare. And then where I took profit was at a rule-based. I took a rule-based profit trigger. Yeah, I said that's a okay way to say it. I took a rule-based profit trigger, even though my target was at previous inventory around 570. Right. So if I didn't have that rule-based profit taking area, then I would have taken profit like probably around 574ish or 573, depending on how price was taken to that area. And I think we had some momentum that took us down there. So I would at least got 574, 573. So in there, if I didn't have to take the profit sooner based on the rules. And talking, I just missed another trigger, and I gotta let it ride because I missed it. Dog it. See, this is, and to be honest, this is why sometimes I kind of back off from narrating, because it's hard to focus on what I'm trying to do. It's hard to focus and execute appropriately and verbally narrate at the same time when I'm actually trying to do it in a way where that I'm teaching almost. Especially if I'm going back and I'm doing like an historical, like, okay, this is what happened. This, I'm explaining a previous sequence of events, because I gotta take my mind back to that area. So that's taking my focus off the charts. And this is why, if it wasn't for that, I would probably live stream every day. Just, but because I want to have times where I can just focus and not have to, because if I'm on the camera, if I'm on the mic, I'm going to step into teacher mode. That's just how I'm wired. If I see something and I think it could help someone, especially someone that's new to this space, I think it could be something valuable for me to share to them, right? I have to go in. I have to do it. All right. So if I'm actually right now considering, I'm near the end of my trading window, or my session window, and I'm considering if I want to call it a day here, which I probably will, by the way that this is printing. But I did have somewhat of a trigger there, and it wasn't really because, okay, so my trigger was above 575, right? However, I was front ran. That trigger was front ran, and I would have had to be thinking to be more aggressive there in order to catch that. And I saw it, and I wanted to. So that's me. Goddamn. That's me thinking if I want to, or observing it from a point of if I want to. I actually witnessed the front run while it happened, and I had the thought, well, do I want to respond to the front run this time? Or do I want to just wait and be disciplined and just wait for my, if I wanted to stick to where I would be looking to my actual initiation area. I know I didn't say that cleanly at all, but, hope you get it. And we're still kind of marking down supply, but we're having strong inventory responses. We're sort of in a budgeting phase where we're building our inventory, but at the same time, we're building our working capital, or our budget, in order to be able to efficiently build our inventory before the next inventory run, or before the next supply run. Now I'm gonna say this, and then I'm gonna end mine. Now, see, a lot of times I get confused. I mean, not necessarily I get confused. Okay, here we go. I use the terms inventory and supply. Now, historically, or in my past, I've actually have been programmed, in a sense, to see supply in a different way than what I'm reading as supply, in this environment, right? So supply in these financial markets, and really in any market, supply is what you have on stock to sell to your customers, right? So it's basically, it's an outgoing term, right? It's I have something and I'm releasing it. Now, in the military, a supply run was more of an intake sort of thing, to where if we're going to go on a supply run, then that means I'm going to go obtain something. So really what it is it's both sides of the coin and how they use the term supply in opposite ways, right? So for our wholesaler, supply is an outgoing term, right? But for the user, the consumer of that product, supply is an ingoing term, right? So I'm taking in supply as a consumer. In the military, from that perspective, we were the consumers because that was the supply that we used as our resources to support our mission. But who we were buying it from, the wholesaler, right? That was supply for them, as into what they could offer to the consumer. Now here's, I'm gonna mess it up even more. Supply, even for the wholesaler, is an incoming term, right? Is an acceptance term. Is something coming towards them in a form of profit. Because yeah, I have this product that I'm releasing, but for that release of this product, of the supply, for that supply release, I bring in money, right? 9 times out of 10, that's a fiat currency. That's a product for a fiat currency exchange. So that term actually is used, not can be used, is used interchangeably. Which kind of, if you really want to get deep with it, and I'm not going to get deep with it, this deep with it here, but if you really want to get deep with it, well, what's the true frequency? What's the true meaning behind that word, or that encapsulated vibration? Supply. And on that note, that's actually takes me to the end of my trading session. I actually had some things that I could have, had some triggers right there if I had not decided to be done for the day and just, accept it to where we were, accept my, how do I want to say this? Just be done for the day. All right, I'm just trying to I'm gonna over explain it right now. So if I didn't want to, be done, if I hadn't already decided to be done for the day, then I actually had some triggers that I could have made some more money off of in hindsight. Of course, that is sponsored by Hindsight Capital. There would have been one that was tough, actually. So there would have been one that would have been tough to execute on, but they would have set up the next movement for me to execute. It would have been slightly easier to execute on that one because of the one that was tough to execute on just by the way that it printed. And let me adjust this perspective so we can zoom out a little bit and I can see that picture more clearly. So now we are marking up supply once again. Supply from the wholesaler's perspective in terms of the product that they have. And that's the last time I'm going to explain that. I may clip that out, actually. I may clip that out and put it somewhere else. Yeah, I may do that. Actually, I kind of like that. All right. So what am I saying? I had a thought there. So yeah, so we're marking up supply, and we're just in this supply markup phase where we possibly could be taking the steps. Definitely not taking a ladder, so we can take that out. We can remove that from our observation as what we can sort of expect from a standpoint of probabilities. It could be possibly setting up to take the ladder, or we could be setting up shop. Really, shop was already set up. And just as a real quick identifier, supply was set up between 576 and 536. So we got a wide store, a big store that we've set up shop. And so as of right now, by the way that it's printing, we could possibly be heading back to inventory, but we are picking up that inventory around 540. But we are picking up some inventory here off of 560. And we could possibly be taking the stairs. Let's see. There's a supply response, which didn't really take us too far. All right, so we're pushing that. We're pushing the supply even higher. And yet we are taking the stairs as of right now. That last print there was that did print as a potential for a reversal and for a new supply high. Also known as a pivot point, taking us back to that inventory. Be watching to see if this happens in a slingshot sort of method, or do we just maintain this inventory? Do we maintain the current picture? Do we maintain the current narrative, which is also inside of automation? And we're getting the automation response. So now we're marking down inventory. So we're heading back to our previous inventory, our main inventory. Now the question would be, do we make it back to our main inventory? Because we had this little mini section back here where we where we facilitated some orders back there. And I'm gonna take this time to pull out my triggers, which they're just looking at it real quickly. There's not too many triggers. It can be kind of hard to identify some actual triggers, which means if I would have been, I'm not even gonna go that deep into it. Yeah. All right, so this was one also. These two would be triggers if they were lower. They're not triggers because they're in the bull zone. And I put all this out in the course that I put on YouTube. Just if you're watching this, is like, if this is one of the first things you've seen from me, first pieces of content you've seen from me, what I'm looking at as triggers here is explained in my Futures Trading Summer School course that's on YouTube for free. I think that's pretty much all we have. Yeah. And almost to a fault, I am a believer in teaching for free. But time costs money. And I mark this off. It's not the strongest one in the world, so we'll just put it as a yellow. Even though it is kind of a trigger, but that's a very weak trigger. So we didn't get to, I didn't have too many triggers to mark off this morning. So officially, I'm going to post this on Rumble. I hope all my rants and my narratives and everything that I went over in today's session I hope, you found it valuable. Appreciate you for watching. Have a good rest of your session. Have a good rest of your day. And I hope you close out the week positively. And we can talk about it tomorrow on the YouTube live stream of Futures Trade Radio. So I see you then. Trade it easy.